Cześć. All right. Good afternoon, sorry, good morning, traders, and welcome to this week's live analysis on space. I will not starting early enough, and for those of you who are link, I'll get the link across to you shortly. But in the meantime, hopefully you've been having some lovely trading week. I don't know about you, but I have. Analysis from the Sunday night analysis have played out, are still playing out. So it's like mid, so we're going to just do a fresh break, get look at fundamentals to know what we're expecting and how we should trade it and things in general. Um, yes, with that said, so pardon, let's head up straight to our chart. Okay, so I'll assume that you can. This is GBP card. Not what we're looking at for now. In our last weekly analysis, JPY index and the fact that JPY in aggressively, and for some reason we expected it to buy last week. But with forex trading and trading in general, it's best to be active, not predictive. And we had a general idea, but we didn't know when they would bounce off or if they will bounce off. But eventually they did. And just give me time. I think it's loading. Okay, this is the Euro index. That's what we're looking at. But let's have a quick look at JPY index first of all. Okay, so my chart looks a bit like it's doing the most. So just okay. So JPY index was trading within this and channel, and we expected it to bounce from the bottom of the channel, but the market did what is referred to as a fake breakout. You see that there was a harami here, indicating that yes, it should turn, or the market should at least consider turning. There was okay. Let's hold that up for a second. Okay, and we're back. So I was saying that the market created a harami here. I don't know why it's taking so long to draw. Yeah, the market created what is referred as a harami here. And the next thing it did Cloud Drive. The next thing it did was it did a fake out and has bought back in. This is in the daily time frame. So when the market made this move and refused to continue this move, that's referred to as a fake out. Now, when that happened, the JPYs, because this is the JPY index, JPY started moving. So USD JPY, CAD JPY, Aussie JPY, and the GBP JPY, often referred to as groupie for some weird reason, made a move in the market. Number one, what was on another place we saw a fake breakout. I think to this analysis, we just really focus on a lot of fake breakouts. On that place, we saw a fake breakout was in the US dollar. The US dollar, oh wow. Okay, so the US dollar index, this is the US dollar index, was squeezing into this pennant structure. That's in case of if you can't see it, or you don't know what it is, here and here. Pennant's like a triangle, but more of a pennant and less of a triangle. Now, the market broke out of this pennant here, and we expected the market to continue its rally. But apparently, it was a fake out and it came back into the pennant, and now it has broken out of the pennant on this side. So, we don't know whether this is a fake breakout because now this has not changed the shape for me. So, I'm no longer seeing a pennant. What I'm seeing is a case of let's clear that up. I'm seeing I'm seeing a ranging market. I'm seeing a ranging market from here, bouncing off here again, and coming back down here. So yes, there's a ranging market there. Will I delete my trend lines for the supposed pennant? No, not really. Just adjust them properly, I guess. Counting for weeks. Week one, week two. That is not WEEK, that's WICK. Maybe week three, just counting for the weeks. But yes, that was another clear fake out in the market. That's clear or drains. And the market has begun to pour down. Um, what else? What else are we looking at? We're just going through the indexes. And when the Japanese yen, the JPY index was selling off, the Japanese stock index, that is the JP Japan 225, was rallying. There's some weird form of inverse correlation between those two. When the Japanese yen is rallying, the Japanese stock index tends to decline, and when the Japanese yen is declining, the JP Japan 225 tends to rally. So knowing that, we decided to look for opportunities in Japan 225 yesterday. So see how well our opportunities are doing. Because I'm a swing trader. I like the joy of being able to enter the market and analyze the market, and the market plays out the way I see it. So I would say it's not about the money, but it is about the money. But more importantly, as a trader, your goal shouldn't be the money. Your goal should be trading properly. Because if you trade properly, the money will follow as an afterthought. It's only clear. Um, Before I get carried away, I don't think I've sent out the link. And for you, those of you asking for the links in my comments, I've sent out the links to the WhatsApp groups and uh, what is it called? On all our platforms, the links are available right now. Just give me a second. And we're live. If you've gotten the link, please like, share, comment, and more importantly, subscribe. So yes, we're going to look at our GPY 225. I don't know why I kept that on that Swiss franc. I name my profiles whatever comes to my head. Um, okay. So this is our Japan 225. And yesterday we made our entry. What trigger? Yes, this is what gave us our entry signal. This market move here is what gave us our entry signal. The market rallied up and it came back. It created a tail. It ate itself back up and ended up as a shooting star. Now, we entered the market here and the market did this. After this rally, it came up and did an inside structure double top. And after that, the market has been pouring down. Now, you can noticeably see that my take profit is not in sight. Maybe because it's in H1, so I'll change the time frame. But I believe that if the Japanese yen actually wakes up, then maybe, just maybe, Japan 225 is heading to hell. But I think our first take profit will be somewhere around here. We should have been here. We took our first profit here, so we have reduced the size of our position when the market got here. And now we're just going to let this other one rally down basically. Clear all drains. H4. So yeah, this is what we're doing. This is what I'll take. This is where I'll take profit is. After this large engulfing candle, so I think this is where our first take profit, our second take profit should be, but this is where we expect the whole move to get to. So when the move gets here again, in our other accounts, we'll take off some of the positions we have there and allow the rally continue. Okay, now so let's go to our breakdown of pairs we're interested in. I will quickly run off to AUDs. I think I kept down the market overview. So we'll see what we have under the AUDs. Oh, ignore my chat. There's a lot of. Okay, let's delete that. I should have been AUD this morning again. Yesterday, we took our position after anticipating that the market was going to create a stop run on this low. This was the low of that weekly move. And if you're in our analysis class on Sundays, I can assure you that my my guy, Mr. Josh, mentioned something about a stop run on this low. And just as we analyzed, the market came here, did a stop run, collected all these people that decided to put stop loss here, just immediately after the low, market collected it. And after collecting it, the market turned around and started buying. Now, this pair, let's do a monthly breakdown of this pair, shall we? Uh-huh. That's nice. This pair, this is the monthly breakdown, and there was this impulsive move to the downside. Now, a lot of people argued for a shoulder, head, another shoulder. Personally, I think it's doing a little too much. Yes, it does look like a head and shoulder, but fish. Now, the market taking out the neckline has come back down, and maybe there might be a pullback to retest it by next month. Who knows? But for now, if this market closes like this, I think the market has made an impulsive move. And when there has been an impulsive move, thank God for Fibonacci. Like, where would we be without Fibonacci? So we'll take this impulse from where it actually started. That was 2 months ago. Imagine sitting in Euro AED for 2 months. Can you imagine? So where it stopped. So we'll be looking for the market to get to the 38.2 line, and that tends to line perfectly well with a zone of, let's mark that out. The 38.2, let's adjust you to the 38.2. So anywhere between the 38.2 and the 50. A lot of people have cluster charts, so like when you're not using something on your chart, please endeavor to delete it. So just create a cluster on your chart. So maybe we might get a, what's it called, pullback to this zone. So what's it called? How to put it? To create enough orders to push the market lower to this bottom zone. Because the market unfortunately doesn't move in one direction. So we'll be watching the market really closely for now. So we'll work it back down to our weekly time frame, and what can we see? We see that it's actually not that far anymore. If this week closes like this, maybe one more week and we'll do that. But I think personally, I think the market has done a double bottom here. It's not the prettiest double bottom you can find, but sometimes it just needs to be right. The first bottom here, and you came back here and has rejected. And oftentimes, when you have a double bottom, pardon my drawing, the one of the easiest ways to trade double bottoms to know what you're expecting, yeah. So if you have this, you should be expecting something about that as the downside of the double bottom. The double bottom will tend to mirror itself. That's how they work. I like chart patterns because with chart patterns, you have a fair idea of what to expect. It doesn't always work out like that, but it creates a fair idea of what you should expect. So you sometimes you enter the market, I don't know how many pips I'm willing to sit in the market for. Chart patterns will give you a general idea. So assuming this is a double bottom here, not assuming it's actually a double bottom. Let's move on at it. So we have, let's measure it from, let's say here's our neckline. We have 270 pips. To mirror it upwards, be somewhere around here. And maybe, okay, 300 pips from our neckline and 300 pips upwards will be here. So we have a general idea of what might happen. So for me now, I would, this is on the weekly time frame. Let's work our way back down to daily. Yeah. I had already, during my analysis, I simply I had drawn out my trend lines of what I'm expecting. Now, so I'm expecting the market to come to this zone, retest this zone, then pull back. That's what I'm expecting. I'm expecting a pullback because whether I like it or not, this is a downtrend. And yes, it has created a double bottom, which is a slight indication of a slowdown in the downtrend, but doesn't mean it has changed the trend. The market is still sitting comfortably below the 50 moving average, and I assure you, still sitting below the 200 moving average on the daily. We're below the 200 moving average. So market here is still a, what's it called to me? It's still in a downtrend. So we're expecting, and what makes up a downtrend? We have things that make up a downtrend. You have your high, you have your low, you have your lower high, then you have your lower low, and you have your lower high, and you have your lower low, so on and so forth. just like that. That's what makes up a downtrend. So with that said, you can now see how this is starting to look like a very active downtrend. Sorry, let me zoom out first. So we have a high, low, lower high. Now we didn't get a lower low just yet. Although we did, maybe actually came in there was a lower low, but it doesn't look too convincing yet. So we wait for a retest and maybe sell it all again to a lower low. But on the other hand, because when you're trading, I keep on saying trading is how you put it. Trading should be as logical as possible. Like you should try to make trading as logical as possible. It's a case of if this, then that, you understand? So if this happens, then I should do that. If this doesn't happen, then I shouldn't do this. So with that said, we'll be looking at, let's clear all drawings. We'll be looking to see if the market breaks above this our trend line. Because what makes this trend line active that is here? The market respected it here. It came back down. It respected it here again. Came back down. It came here, it broke above it. It came back to retest it before making this move. It came back, it respected it here again. So we've seen that although it broke it without disrespect, with utter disrespect. This is completely disrespectful. But it came back here and showed some respect before it went above again, creating a fake out and back inside. So yes, we have an active, strong trend line working for us here. So if we'll see what the market does around here. If the market breaks above and comes for a retest, then we are sure the market is coming here. But if it reaches here and doesn't break above and it starts pouring down, we'll sell it. If it reaches here and breaks above and does a fake out, we'll sell it. So for now, we are going to wait because yesterday I was in this Euro AUD for a buy. We got our take profit and we hopped out of there because the market is now our own. But now we know what next in our trading plan. That's what a lot of traders don't have a trading plan. It's like you open your system and you see candlesticks and you are looking for entry. If you have a trading plan, you create series of ideas of what could happen and what might not happen. So when these things happen, you know what to do and how to place your trades, I guess. Those are the basic, easy ways to stay in these markets to keep yourself profitable as a trader. Pardon. Dun, 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 dun. Okay, so that's for Euro AUD. Let's head up to I didn't do GBP AUD. AUD card. Okay. So this is AUD card. Before AUD card, let's go head over to AUD index. So know what we're doing. The index is like a weighted basket of a currency against other currencies. I've explained it. Like each other currency has a certain percentage. Like think of it like a pie chart, and each other currency has a certain portion of the pie weighted differently. And the calculations are based on your trade with the other economy, global sentiments, and whatnot. Speaking of global sentiment, yesterday there was good news from the geopolitical tensions in Ukraine and Russia, with Russia saying that they would reduce military presence and reduce attacks at their Ukrainian capital, Kiev, or around it. So that helped the market breathe a little because I assure you, market participants have been holding their breath and just trying to protect their money in what ways. So you see them running to commodities, things like gold, silver, crude oil, and yesterday all of those things on the arrival of that decision and news, all of those things started to sell like people started unwinding their investments in those places. So to see that hopefully the whole thing works out. And okay, good. Okay. So this is the GBP, sorry, the AED index, AEDM soon. And all of these are available to trade on FX space. More reasons why you should trade on FX space. Now, the AED index has come to retest a strong zone, but let's break it down weekly and monthly. So you all see what I'm talking about. This is the AED index, yeah. And the AED index has come to retest a very strong zone. This is, I don't wonder what that means. Okay. So we're going as far back as December 2005, and we see that the market bounced here and rejected upwards. The market tested it here again, and it pulled back down. There was this test of this zone again. Let's close it for a second. Let's extend this fellow. Yep, that's the one we're looking for. Okay, now with that done, let's go back and see what the market is doing. So we had EU here. The market is still within this zone. We had this structure here again. We had here, so we had all of here. The market just kept on doing its own thing there. We have you here, a hidden level. I've explained this times and time again. Sorry, time and time again. When you have a flush of bearish candles and you have like small bullish candles in between hidden, they just help you mark hidden zones. That's what they are. The market is acknowledging those zones. So yeah, we have something like that here, another one here. So in the monthly time frame, yeah, the market has now this is the past, but let's pay attention to the most recent past, shall we? So let's move our chart. Thank you. Okay. The market has come back down from this low, creating a W formation. And now what do we expect after a W formation? The market has created a proper W formation. An overextend, maybe an overextension, but this is a perfect W. I don't think it's an overextension. If the market continues buying, it creates an overextension. But after this, we expect the market to simply come back to retest the neckline of the W formation and bounce off. So we're expecting a pullback and a continuation for the AED index, meaning we're expecting AED pairs to sell off for a bit, then find support and start buying. Now let's clear all of that and work our way back down to a smaller time frame weekly. And the market is doing just that. Like You can now clearly see the W formation. Let's point out to you again. We, wa, we. So now we're expecting a retest of this neckline, which will happen to be also maybe a retest of this trend line. So we have multiple reasons for multiple reasons for our entry. I don't use this trend line. This was the initial trend line, must be daily. I will see this as a fake out and back on the trend line, maybe a retest this. Fine. We'll use this one. There are more touches here, so we'll just use this one. Your trend line should have more touches. Like so now what we're expecting is that there's the possibility of an extension. There's a possibility of an extension, but what I'm expecting is a pullback before a continuation. That's what I'm expecting. So for the next couple of weeks, maybe the AED is going to breathe a little. Just maybe. Now let's go ahead on to daily. We head straight up to daily and we can now see down the daily time frame here. The market is now showing no signs of rejection. The AED pairs are showing signs of rejection. Now we're watching to see if the market starts to sell off from here and how aggressive that sell will be. Well, if today's candlestick closes like this, that's giving me my entry. I'll probably enter the market and put my stop loss just above here and sell it back down. If I'm putting my stop loss above here, that would be seven pips actually. I'll be looking to collect 18 pips to 30 pips. I'm not greedy anyway. I'll stop at 18.3. Greed is a bastard. But if he takes it out, we'll go on with it. But I expect there to be a bounce from 18.3 on 19.5 within this zone. I expect there to be a bounce from them. And you pull out your analysis and you now notice that there's a trend line there. So I have confidence reasons for a bounce from this zone. But that's what we're looking at first. Although there's this hidden zone. This hidden zone. I told you when you have a flush of candlesticks and you have a small candlestick doing the direct opposite, it tells you of a hidden zone. So yes, there's a hidden zone here. Keeps on this tick sound I'm hearing. I'm not even sure what that is. Um, so yeah, that's what we're looking at. That's what I am looking at. The hitcher is already creating multiple rejections from this zone. We have rejection one. What I thought. We have rejection one, rejection two, rejection three from this same zone. So we're saying if the market continues like this, AED pairs are going to have a cute sell-off. So like knowing this, now you're going to look for what you're going to sell them off against. I think AEG JPY might be an interesting sell, seeing as JPY is also coming to life. But keep in mind it's counter trend. So if you're going to enter the AEG JPY move, you're just hitting in and out. You're not going to swing it. It's counter trend, and the trend is your friend. Just keep that as a rule of thumb in your head that the trend is your friend. So if you are going to trade a counter trend pullback, tell yourself it's a counter trend pullback I'm trading, and expect to get out of the market quickly as possible. You'll be sitting down there for you have no business sitting down there for too long. Anyways, you see the AED just maybe. This is AED H4, and the market has come to retest this zone. So maybe it might use here as a shoulder, or it might bounce up and create another shoulder, creating a proper head and shoulder and opening the gates of hell for a sell back down to here. So that's a possibility here. If you see something like this, oh, my drawing is horrible. Yep, that looks better now. Um, so if you see a rejection from here, a slight pullback to here, we would sell. Maybe you might just use this as a shoulder and have some hunchback type of shoulder thing, some quas. Did you watch a hunchback of Notre Dame? Quasimodo and whatnot. Well, this is what I'm expecting. A retest of this 92 and a move back down to 89. That's what I'm looking at for AEDJPY. But it's not fixed in the sand, so we're watching. One of the most useful tools as a trader is your patience. You have to be able to watch the market. Doesn't mean you have to sit down in your chart in front of your chart 24/7. You could set an alarm. Let's show you how to do that. You could set an alarm, trading, alert. So if the market comes here to alert me and to let me know that it got here. And if you trade with your both your phone and your laptop, if you trade with your if you trade your laptop and monitor your trade with your phone, you could easily link your alert system. You could easily link your alert system to your mobile phone. You go to tools, options, chat, events. We should have alerts somewhere here. Huh. No, that's what you're. Yes, notifications. So you enable push notifications and notify and trend transactions. Then you go to your Meta Quotes ID. You go to your M MT4 app or MT5 app and copy your Meta Quotes ID and you type it here and you test it. Or if you don't have, you could download for your Android or you could download for your iPhone, whatever. It's compatible with almost every device. It's every device, not almost every device. Well, almost every, apart from the ones who are, I think, compatible with the ones who are outdated. Um, yeah, so that's how you can do that. With that said, I'm going to look at. I'm avoiding looking at AED I don't get interested there. Then now let's go back to AED card. This is AED card on the daily. I am seeing a clear double top one, rejection from this price level, top two, rejection from this price level. Now within here, there's so many smaller rejections, telling that the market is no longer interested in going up right now. Now, if I have missed my entry in AED card because I don't like how choppy it's been trading, we're trading a lot of sideways ish. So I'm not really interested in it. But the market could continue this whole sideways dance and dance its way back down to this level and bounce. Or it could pick strength and just steer, sorry, it could pick strength and just steer its way back down to here, which creates a really scary, which creates a really scary turn of events. But I think the more likely thing that will happen, because if it does this, it will create the opening to mirror this length back down and take the market to somewhere around here. That line is not straight. Let's try harder. Yep. Nope. Still not straight, but you get my idea. Do you know the good part? I'll tell you what the good part is. There is an actual horizontal line, so for people who can't draw straight lines. Thank God for that. Um, but yes, that's what I'm seeing in AED card. It's not my choice market because with the current fundamental backdrop, the terms of fundamentals, the crude oil supply is being tampered with sanctions here, sanctions there, people trying to increase the output, other people not wanting to increase output, things of that nature. So crude oil could continue climbing up later on. And as long as crude oil is climbing up, the Canadian dollar is going to do pretty well, seeing as Canada is one of crude oil is one of Canada's biggest exports, apart from this. Yes, I'm going to say it. Apart from these superstars, I mean, the only thing bigger than crude oil that came out of Canada is probably Justin Bieber and The Weekend. But other than that, we might have a choppy market because of, yes, AED might pick up strength because their economy is doing really well for now and whatnot. But CAD might still be strong. So when you have two strong currencies, you probably just have a choppy market. When you have one strong currency and one weak currency, you get a trend. When you have one strong currency and another strong currency, you get a choppy market. And you have two weak currencies, you should ignore it. You have no business there. But you also get a choppy market. And that's our market wrap up for today. Let's see if we could find one more pair to quickly run through and Bitcoin. Bitcoin, Bitcoin, Bitcoin. Bitcoin has finally broken above the 45 mark. The market for the past since January has been ranging between 34 and 45, a 10,000 pip range. So it has been doing that beautifully. And within the last move up, it finally broke above it. To be honest, I didn't expect it to break above it. I expected it to stop at 46 and fade its way back down first, but here we are, we're battling 47. But the thing is, Bitcoin, before the madness, Bitcoin was really mad. It didn't have structure to keep it from doing whatever I wanted to do. Now, after the magic of the market happens, Bitcoin starts to look like it has more structure to it, which makes it slightly more interesting to trade. That is day trade actually. If you're not looking to hold it as, well, I don't even think you can hold it. It's digital assets, but you get my point. Now, the market has printed a harami here, and maybe this might be a fake out and to pull back into this range. I do not know. But for now, we are watching. I think my best idea is I will assume that this is not a fake out and this is an actual breakout, and I'll wait for the pullback, a comfortable pullback here, and maybe just buy with them as they're going back up because you don't want to buy at the resistance. If you're buying here, yes, it's low, but you're actually buying at the resistance. So maybe I'll wait for a pullback to test this 45 zone, then rally with them. So we'll be watching it carefully. I don't like what it has printed here. It's a candlestick formation that rings the bell for people who are willing to sell to start considering selling. So I'll assume that the bulls have it here and the market will just pull back down. But nobody knows the current economic backdrop. We'll see that since okay, early February when just before March, when the invasion started, the market sold off and it created a clean double bottom here. I wonder what I was doing when I saw this double bottom. This kind of things pay me as a trader. Like you're doing your analysis and you see things like and you didn't take advantage of the opportunity. I wonder where in God's green earth was I when this market did this double bottom. Oh, I feel so. But the Lord is our strength. Now the market has moved, so we're hoping that the market comes back to retest here and it moves on. I think there's a moving average holding this thing on its head here. So let's. I can see my 50 is already there. RS, I know you. Moving average. So let's bring out 200. Say we paint you blue. No, paint you red. I prefer my 800 being blue. Voila. It is sitting directly below the 200-day moving average, which is creating a confluence of resistance. So yeah, just maybe myself. Maybe. We'll keep an eye on Bitcoin. A break above the 200 moving average has changed the direction of Bitcoin, obviously, but for now, it's still in a choppy range. It's moving sideways for now, and hopefully, this is a breakout. So we'll wait for a retest of here and buy with them. Now, with that said, thank you for. I'd like to use the opportunity to thank FX Space for well this weekly analysis. It's midweek analysis actually. I'd like to thank FX Space for this midweek analysis and wish all our traders who watch this, who watch it live, and who will watch it later, successful trading week. I forgot to mention, let's quickly do that. I forgot to mention that on Friday is the NFP, and that move we saw in the dollar might just be them getting ready to creating space to buy for the NFP. Let's quickly check Forex Faction. ADP, what's in serious? Dollar. ADP non-farm pair. Wednesday non-farm pair. It's loading. It's loading. So please, if you're watching this video, remember to like, comment, and subscribe to our channel. And like, if you have any idea for a good network service, please feel free to recommend. Because trading in Nigeria is so hard. Okay, so here we are. We have the ADP non-farm payroll today. It's like a predecessor to the NFP itself. And we have crude oil inventories to let us know the crude oil supply and demand. I think it's the IEA, the International Engineering Association, that provides this crude oil inventories. But the model load of economic events will happen tomorrow on Friday. Okay, so I'll give you a quick roundup of economic backdrop. The world has moved from the pandemic time to when they were looking for a solution to the global markets for the after the pandemic crash, because it wasn't a recession, it was just like a quick swerve down and another move up. So now we're at a point where their solutions have brought up inflation and they have inflated the market. They have pumped so much money into the market, and now the market is literally inflated. So now central banks are looking to curb inflation, and they've started raising rates here and there. GBP were probably the first people to raise rates. No, I think no, that was CAD. Then GBP followed a couple of months later. Now the dollar raised their rates in March, the US dollar. But more importantly, it's just tweaking your rates a little. It's not enough to, it's not like to cure the inflation immediately. So, and you cannot just do like Russia did and wake up and skyrocket your rates to 20 basis points overnight. So you can't do that. So now they have decided to buy, increase their rates little by little with 0.25, 0.50. But more importantly, is when we now know that there are going to be rate hikes, but we don't know how at what percentage are going to hike the rates. So the Fed, what actually brought me talking about it, the Fed have two mandates: the job mandate and economic stability. And under their job mandates, they have to make sure that the economy has a certain level of unemployment and the jobs nature is pretty good. And currently, what's it called? Their economic mandate, they have to make sure that the dollar is still king. No matter what they do, they can't. There is one mandate that they cannot successfully botch. Like you cannot afford to screw it up. Um, so tomorrow on Thursday, we now have the core price index, the PCE. The core PCE indexes. This is the Fed's view of inflation. And we're anticipating the Fed is hoping that the previous one is 0.5, this one is going to come out at 0.4, and they're going to hope that the inflation is coming down. CAD also have GDP month on month, but I'm not really interested in that. Now, with that, when this comes out tomorrow, if it comes out hotter than expected, maybe 0.5, maybe 0.6, the Fed will see that inflation is not really coming down. Then, if the non-farm payroll comes out really positive, the Fed can see that, okay, they have done one of their jobs. If they can continue dropping the unemployment rate, the last one was 3.8, if they can drop it to 3.7 or 3.6 and create more jobs than this figure. The last figure was 678. Market is expecting 485,000 jobs. So anything above this, and if it's above these two, that's telling the Fed that okay, when it comes to jobs, we have done our part, but the inflation, the economic stability is dwindling. So now they'll be considering hiking rates a little more. Then we also have later on that same day the ICMI manufacture. All these PMI, PCE, they are leading indicators. They tell you about inflation. So like when they come out hotter than expected, it's telling us that yeah, there's inflation coming around the corner. Well, it's no longer around the corner right now. Inflation is here and it's everywhere. So we'll be looking to take advantage of this non-farm payroll. We'll go back to our charts quickly and head up to the index actually. I think the program will be indices. I'm not sure. Oof, the dollar has bounced off from here. So I told you you've seen here as a potential range, and this is just H4. I'm not even expecting anything serious today. Maybe it's going to dance around a bit, but we'll be watching to see the dollar buy back. Maybe creates a pattern before Friday. So tell us that it's going to buy. So we'll be watching the dollar index for that. Okay, with that said, I have done all my thank you. So we'll end today's class. Thank you for joining in. And if you're going to watch it later, ensure to subscribe for more videos like this and like. Thank you very much.